Hey folks, with us today, Bhaskar, co-founder of eDRV. Super happy to have you on.
Lovely to be here, Nicholas.
Awesome.
Thanks for having me.
Let's start with the most important thing. What does your startup do and who is it for?
Sure. So eDRV or eDRV, we are an enterprise SaaS software. Our customers are mainly infrastructure companies that are either providing charging as a service to electric vehicle drivers or operators of electric vehicle fleets who want to use our platform to run their charging operations. So it's basically a SaaS platform that enables charging operations, which means connecting and controlling of charging equipment, hardware, the energy that flows through them, the transactions that are processed, either on the monetary side or also just for captive use. We were a company founded about 3 years ago in Amsterdam. We moved to the US 2 years ago. And we're very excited to be working with customers on both sides of the pond.
How did you make the decision to move the company to the US?
Yeah, that's a great question, actually. So maybe a little bit of backstory there. So when we were starting the company in 2020, just around the time of the pandemic, we realized that most of the European countries, Netherlands included, were quite far down the road of electrification. And then instead of using our innovation chips to try and catch up with where the market was, we decided to focus early on the US market, which was at least a couple of years behind Europe at that point. And just so that we could build for a market and then not have to spend most of our energies trying to do something which customers already expected and could also innovate more. But when we started fundraising, we kind of realized that our investors always asked the question, well, you're a Dutch company, but your customers are in the US, so why don't you raise money in the US? But then when we went to American investors, they said, oh, but you're a Dutch company, so why don't you raise money in Europe? So in a nutshell, we realized that the best way was for us to present a uniform face. So, American company, selling to American customers, raising money from American investors. And also we made the decision to move ourselves as founders to the US. So that was the reason for that decision. And I think in hindsight, it's been a good decision.
I'm curious, as a founder who's also, as everybody can hear, from Europe, what's the difference doing business like in the US compared to like Central and Western Europe?
Yeah, I think it's an entirely, as you can expect, it's an entirely different market. There's books and books and books that have been written about the differences culturally as well as market-wise. Of course, US is not one country, it's 50 countries, as you'll often hear. So there's a lot of learning, even within the country. So for us, the differences have been at every level, like how we approach customers, how we negotiate, the willingness to pay, the expectations. And then also when we go to the investor or, the fundraising side, it's also a very different I would say approach. And, generally a lot of times you'll hear founders say that the risk appetite is different. Like here, when we were raising early on, trying to raise our pre-seed investment from European investors, a lot of times the kind of questions we got were, how much is your revenue? How much did you do in your first year? Even before we'd built the entire product. And then we're like, look, this is a very early industry. The revenue is not the best indicator of a product. Or our potential, because we're barely getting started. Whereas when we spoke to investors in the US, the mindset was more different. It was like, okay, what's your big vision? What do you think this could be in the next 5-10 years? Prove to us, that there's a massive vision and a potential in the market. And then, of course, revenue will come, but then first you need to go out there and like figure out exactly where your product market fit is. So it's different approaches, both on the customer as well as the fundraising side.
So it sounds like the fundraising is maybe not easier, but a bit more founder friendly or understanding of like the typical VC model. How is it on the customer acquisition side? Is the US like way more competitive? How is that, and how do you approach it there?
That's a good question. I wouldn't necessarily say that specifically if I just focus on customer acquisition that there's a difference. To be honest, as a pre-product market fit company, our learning was more around how do we iterate on, the customer profile or the initial customer, the ICP that we focused on. And then what did we learn from that? From those conversations we were having around the problem that the customers faced, and then wanted a product from us for. And then actually we had our own journey where we kind of first focused on developers who were building applications for charging, and then transitioning from there, actually a very significant pivot to focus on enterprise customers who were looking at much bigger solution set, of course, also with a hugely significant willingness to pay, all the way from maybe hundreds of dollars to tens of thousands, hundreds of thousands of dollars. So kind of like a big shift. So rather than framing it as okay, differences between American and European customers, I think for us it's been more of a learning of who is the right customer for what we're trying to do. And having now got to a point where we are now, we're taking on customers both in the US and also in Europe. In fact, we just signed up one of our biggest customer accounts out of the UK in just a couple of months ago. So now we're kind of seeing that happen on both tracks.
If you need to hire the right developers and ship fast, then React Squad is for you. A boutique agency that specializes in React and only works with fast growth startups. Visit reactsquad.io to learn more.
Amazing. Let's go back a couple of years. How did you initially get into the founder scene? Like what itched you to become a founder, and tell us that story.
Yeah, it's a pretty straightforward story, actually. I'm a chemical engineer by training. I was working in the semiconductor industry for about 5 years before I transitioned to clean energy in a job capacity. I was working, I had a nice job. I was leading operations for an environmental nonprofit, working on pretty impactful issues like how to finance more rooftop solar, how to promote more energy efficiency in buildings. So it was satisfying, it was impactful, but I felt that if I did not become an entrepreneur at that stage in my career, which was already maybe 10, 12 years of work experience, I felt that I would never be able to do that. And then that was kind of like the initial impetus to kind of step outside of my comfort zone and look for something more risky. And then, of course, I was supported by my family. And then I think it was more of a journey of, okay, what did I know? What were some of the exciting problems that, seemed to be attractive enough to try and, sink my teeth into and try to build a business around. So my first business was focusing on financing rural microgrids in emerging markets in India and Africa. So specifically, we were trying to raise crowdfunding for decentralized microgrids. And that was a business. It did okay, but, was not taking off or was not super exciting. So around the time of the pandemic, I closed or wound that business down and then transitioned into what we're doing now.
I would love to double click on the start there, because you mentioned that it was quite straightforward, but I think a lot of the stories I heard and like we hear also in the media is like, yeah, I was in this job, I saw this burning issue, and that pulled me into being a founder. And I think a ton of people, like I know personally, just like also have the itch of becoming founders. So I would love to really dig in there, like how did you notice that you had that drive of doing your own thing? And then also, was there a specific thing that happened that kind of like mentally got you to the point of like jumping in there?
Yeah, it's a great question. I would actually say that, for me, it was, like falling in love slowly rather than like, waking up one morning and then realizing that this was my calling and then I wanted to do that. I think it kind of, what started off as, okay, I would like to explore being an entrepreneur, trying to solve a problem in a more tangible, hands-on way that I was already familiar with. So I think the problem was there, which was, how do I finance, or how do we, as, the society, but then also, us as companies or me as an individual, contribute to a quicker transition to clean energy. So that was sort of the big problem I was working on. Within that, I was fascinated by how do you solve the financing challenge faced by clean energy projects at a micro scale in emerging markets. So specific challenge, that was the one that, I was working on in my job. And then what was not satisfying for me was to do that in a capacity which is hands off. Like in a job, you're if something doesn't work, you have limited stakes because you're kind of protected. You have your salary coming in. So I was itching to kind of get out there and then feel more of a real world connection with the problem I was solving, and then also have a more tangible set of actions towards addressing it. So that was the jump into entrepreneurship. But I think the surprising part was, of course, it's a great journey of learning. Of course, we're all still learning. It's been 10 years now, and I'm still learning every day. The thing that keeps me motivated now, is every day you kind of experience a little bit more of that sense of agency, that sense of, you're responsible for every day making contribution to the success of the company through people, through the team that you put together, by bringing yourself 100%, and even if you're not 100%, then kind of finding that strength in a core team, and then the team then goes on and does things that are much better than what you could have done. So I think there's a little bit of a virtuous cycle that kind of takes off at some point, and then that's what really keeps you motivated.
Love that. And then let's jump to today. How big is the company? What's the revenue? What's the headcount? Tell us everything.
Sure. Yeah, sure. So, like I said, we're enterprise SaaS. We now have about 20 customers. Typically, customers, some of course spend maybe thousands of dollars, but our big customers are already well on their way to spend hundreds of thousands of dollars per year with eDRV on software services. We're a team of 10 people. We're doing about $500,000 in revenue at the moment in ARR. So last year we tripled, and then this year we're looking at triple again. So hopefully we'll close 2024 close to $1 million or slightly more in revenue. Yeah, what more can I tell you?
Awesome. So first off, great to hear that you're up to the triple, double route there.
Oh, we'll see.
I bet. What's the team look like? Like how many devs? How many people in on the sales side, because it's enterprise sales? Like what's the structure like?
Sure. So we have 2 people in sales. So myself and a colleague, 1 person in admin, 1 person in marketing, and then everybody else is an engineer. So 4 people in non-engineering, and then 6 in engineering. Within engineering, basically DevOps plus full stack engineers. So it's a pretty, 1 DevOps, 1 customer success, everybody else is full stack. So that's the way the engineering team is split up. Because our product, like I said, is enterprise. So of course the platform reliability, all that stuff becomes very critical. We had our share of, nightmarish scenarios with the platform suffering outages 2 years ago. And then at that point, we realized that we had to invest very early in making sure that the platform was robust, secure, and all of that. So that's where most of our headcount is dedicated. And then we're now starting to build out our sales team or sales engine, if you will. And then that's where a lot of our efforts are placed right now to enhance our marketing, enhance our sales, just the outbound and just the approach for that.
How do you think about that? Because I heard from a ton of people that the classical or the typical way of sending cold emails, doing cold calls, getting leads is getting harder and harder. So how do you think about GTM and how do you guys approach it?
Yeah, that's a great question. And I think no easy answers to that question. I would say our journey has been in that discovery of GTM. In a previous iteration before our enterprise pivot, we tested with a developer-led GTM, wherein we put out a lot of our API documentation, guides, stuff for product managers, people wanting to build applications with charging. And then we saw some good success in getting a lot of inbound interest. A lot of Google blessed us with a relatively high SEO ranking because we were so unique in what we were doing, and there's a lot of people. Well, not a lot of people in a volume sense, but a lot of specific people who wanted to exactly find the solution that eDRV was providing. We transitioned from that GTM approach to the enterprise focus, realizing that many of the customers who found us that way as developers, didn't have the potential to spend hundreds of millions of dollars in the infrastructure that's needed for our product to then be meaningful. So what that led to is us kind of, again, transitioning our GTM approach to saying, okay, we will be more sales led. And we are sales led, which is significantly enhanced and enabled by our developer documentation. So once we reach out to a customer, they found us, maybe we get people to trials, maybe we get people to just talk about and just, hear about what eDRV is and, can do. And then, then we invite them into our documentation, we let them play with it. And then they experience the product and then they go, oh, this is very interesting. I can actually do stuff, in a much better way than I could with another platform. And that's why, and they kind of convert. So I would say I agree that GTM remains challenging. I think outbound is difficult. One recent discovery for us also was, just thinking about which channels are working the best for us. So we found that actually webinars in our industry, in this particular segment at stage, have been a very effective tool for us. So we're significantly doubling down on that. And because again, in our minds, our goal is like we need to convert maybe one customer a month, 2 customers a month. That's already huge because that's a huge investment down the road, because more and more of them then will become the kind of enterprise accounts that can be a huge source of revenue for us in year 2, year 3. So that's the approach that is working for us right now. But it's a moving it's a moving target.
Yeah. I mean, I love that you figured out that it's webinars and then double down, because I mean, it's not the sexy thing to do, right? Like, it's 2024. No marketer's like, oh yeah, let's do a webinar. That's like super, super fun. But I think that's like the industry specific thing, right? And then
it is.
Just one quick question, because I have no freaking clue about enterprise sales. Is the first step usually a paid pilot? Is it, do they sign up immediately? Like, what's the first foot in the door in such an enterprise deal?
Yeah, that's a great question, and no standard answer. Maybe the best way I can describe it is to just talk about like what's worked for us in recent, I'd say, last 6 to 12 months. We do have paid pilots more and more now than before. So we're moving in that direction. In many cases, what's worked for us is a customer came to us, we offered them a trial, and then it was very important for the customer to experience the product and then realize its value. And at that point, the other learning for us was also that not every customer is a good customer for the kind of product that we have. For example, like because it's a developer platform, a lot of customers came with the expectation that they wanted something ready-made, which is built already, and that they did not want to do the work. They didn't have the DNA. They didn't want to, because of a variety of reasons. And then we were probably being a little bit more, loose with our sales qualification. So I would say, as we have become more specific and more targeted in terms of, well, they're not really a good customer fit for us, so we should not try to push them down the same funnel and then try to get them through a trial, and then they see something and then they kind of fall away because they're not really interested because they're not a good fit. So I would say that has helped us define the process better, and in fact, when we do that qualification better, we can sometimes even ask customers for a payment for a trial. And then sometimes they're okay to do that, and then sometimes the customer is so valuable that we offer a trial for free. So in short, I think it's the customer acquisition via trial is not independent of sort of your SQL. And then if you do the first part better, then you can actually get more out of what's in the middle of the funnel and so on and so forth. So again, that's our current state. And if you ask me next year, my answer will probably be different.
Yeah.
But that's where we are at the moment.
No, but I love that, because in the end, sure, we have to think in funnels and SQLs and trials, but for the other side, it's just the way they buy, right? So for them, it's just buyer experience. And if the thing you offer is like a better fit, then of course a higher rate of them is willing to pay. I love that.
Yeah, because there's so many both verbal and non-verbal cues, right? Like, the classic thing that, if you listen to any of the videos or podcasts from like YC or any of the, hundreds of, startup resources, is like, is there a hair on fire problem? And then, if the customer is really desperate, I mean, that's, as a startup, your energy should be focused on like finding those customers who are really desperate for what you're building, and then kind of like build out from there. So, I think, if we can iterate on that as a company and then keep doing that, then, hopefully that motion should become more efficient and easier. And, because we're just finding the right customers, and then our energy should be spent up front, making sure that we don't put the wrong kind of customer in the funnel, because then we're wasting our energy.
I fully agree. I love it. So as the final question before we come up on time here, it's your second startup. The first you had to wind down before or when COVID hit. What's the thing you do most differently the second time around compared to that first?
Yeah, everything. I mean, I don't know. It's like you connect the dots looking backwards, obviously. So the first startup, if I knew then what I know now, we never had product market fit. We were trying to, we never really took a hard look at what the numbers meant, in terms of what the business wanted to be, what would it take for that to be successful. Also, we never sort of tried to imagine what kind of a company it would be. Both in terms of like, what does it feel like? What does it look like? Where do I go to work? What does my team look like? What kind of, what do we do on a day-to-day basis? I think it's funny. These things kind of sound pretty simplistic, but if you can actually put that, imagine that, just mental picture, and then you, most importantly, you kind of share that with your team and with your co-founders. That's a good way to kind of set a direction. So I think both in terms of like just plain vanilla brass tacks of like, hey, is this a viable business potentially? Is this the kind of business that I want to spend like the next 5, probably 10 years of my life doing? And then, does it align with my life goals, with my personal expectations, both, money wise, work-life balance wise, all of that stuff. So yeah, I mean, it's a good question. It's a little embarrassing to say that. Like, I feel like I was just doing it all wrong. So yeah.
I mean, but to be honest, it's always when you look back, even a year, you're like, I was so stupid back then. But the next year we will look back and it will be the same thing all over.
Yeah, totally.
Amazing. Bhaskar, thanks a ton for coming on. One last thing, where can people out of the energy sector find you and your company online to get in touch?
Yeah, of course. So yeah, please hit me up on LinkedIn. I have a fairly unique name. I think you'll post it in the podcast. Yep. So that should be easy to find. On Twitter, Bhaskar Deol, or on LinkedIn, or visit eDRV.io. So eDRV.io. Yeah, love to have a chat if you're interested in clean energy. If you want to talk about electric vehicle charging, more than happy to chat.
And we will make sure to link everything up properly below so that it's easy to find. Bhaskar, thanks a ton, man.
Thank you so much. Lovely to be on the podcast. Thanks for having me, Nicholas.
If you like this episode, then you'll love the SaaS Operator, a weekly newsletter brought to you by EarlyNode, with actionable insights from SaaS experts in the industry, delivered right to your inbox every Tuesday for free. Visit earlynode.com to subscribe.